9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We are counting down to the open markets in Hong Kong. Our top stories today, the dollar and U.S. futures are under pressure as investors digest fresh trade uncertainty. Now, you have President Trump raising his global tariff to 15%. That's after the U.S. Supreme Court struck down his so-called reciprocal levies.
The tariff turmoil set to boost Chinese President Xi Jinping's bargaining power for his meeting with Trump next month in Beijing.
Senior U.S. officials say key trade deals remain in effect, but India and the EU step back on talks and ratification, while Japan calls the situation a real mess.
And as the Trump administration charts a new trade path, we look at their possible legal options and assess the market and retail industry fallout. What weekend? I took a week and a half off and I learned a whole set of fresh news here. I thought I was going to be asking you today on what I missed, but really, it seems like I haven't missed much because a lot happened just in the last maybe 3 to 4 days. Right now, when it comes to tariffs, really being put back in the spotlight in a big way.
Yes, and if you asked me where we are on the tariff front, I'm still trying to wrap my head around the latest, right? 10, it went to 15%. Lots of people are scrambling whether to adjust, and we'll get the, we're getting a whole varied reaction across the region, of course, as it pertains to what they're doing and what they're pushing for. But yes, if you, in the event that you missed what happened over the weekend from Friday, so we did have, of course, that red headline crossing at about 11 p.m. Hong Kong time on Friday, the Supreme Court striking down. And then shortly after, you had the U.S. president going from 10%, and then he went to 15% a few hours after that. And then, of course, all of this, the attention will then center around the State of the Union, of course, this week.
Yeah, I mean, largely expected to talk about the economy, which you could argue, I mean, most Americans do believe that, they do oppose tariffs, that this is what has been fueling a lot of the affordability crisis in the U.S. So how he faces Congress, how he faces, of course, the American public after this whirlwind that we've seen over the weekend is certainly one thing. But you have seen him really try alternative ways to try to make up for, of course, what the Supreme Court has done in really trying to say these IEEPA tariffs were illegal, right? So certainly that's one thing to look here. What does 10%, what does 15% mean? There wasn't that mention of refunds, right? And what this means for a lot of the manufacturers, the importers out there that have been asking for refunds. So certainly there's a lot of questions on not just what the companies are doing, but also how world leaders are going to be approaching any sort of trade negotiations moving forward.
Yeah, I think it also depends on whether you were part of the plaintiffs on the Supreme Court case, I think, and we'll get into the legal ramifications of this and whether or not you do have recourse, of course, to claw back some refunds as well. That goes into, of course, a very big meeting that's taking place at the end of March. We have now understand there are some dates now, specifically that trip, of course, Donald Trump to China. Not to also mention that when you look at the market reaction, it's so far limited mostly to U.S. assets. Asia's doing quite well. In fact, Korea's up substantially again. What else is new there? Taiwan is coming online. In fact, we did hear, of course, just on more context on this, from the U.S. Trade Representative Jameson Greer and President Trump about the impact of the Supreme Court ruling.
These deals are going to be good deals. We expect to stand by them. We expect our partners to stand by them. And I haven't heard anyone yet come to me and say the deal's off. They want to see how this plays out. I'm in active conversation with them on it.
Their decision's incorrect, but it doesn't matter because we have very powerful alternatives that have been approved by this decision. They've been approved by the decision for those that thought they had us.
Right. A look at market reaction right now. So just keep in mind, Japan cash markets are shut. That means no treasuries going into the session today. Nikkei futures, though, are off. S&P futures don't normally see this types of declines this time of the day, but here we are, of course, U.S. assets. Korea, 1.5% to the upside. Flip the page. Taiwan, by the way, is coming online. Within that, of course, we're looking at, obviously, the AI plays plus the exporting side of things. Here's a quick stat on Korea while we change the page here, right? So we're almost at March, and that market has actually closed lower just 5 or 6 times all year. Just imagine that, of course, right? Okay, Bloomberg Dollar Index, as you can see, so the dollar is softer right now. Bond yields would be pushing slightly to the downside right now. So we're giving back some of the gains as far as crude is concerned. Back to Yvonne's earlier point that we were meant to be looking at possibilities around Iran that's been replaced by tariffs. So we're down as far as the risk premium goes on oil on the energy markets, 1.2%. Gold is up by about 2%. A quick glance at U.S. assets, well, Chinese assets in the U.S. on Friday mostly ended to the upside, and of course we're going into the open today on largely the front foot last we checked, following, of course, quite a bad session on Friday on Chinese tech plays here in Hong Kong. And of course, mainland markets remain shut, of course, so just keep that in mind going into this Monday session.
Yeah, so to help us really unpack all these developments, let's bring in our team. I want to bring in our politics editor, Laura Davison. She's with us here. Also, our chief North Asia correspondent, Stephen Ingles. Laura, I'll start with you. So now we're talking 15% tariffs for 150 days. What comes next?
Really, really hard to say. Remember, we're just about 11 months out from those April 2nd Liberation Day tariffs. All these deals were cut. Everyone was in limbo for 11 months. We probably have at least a year, if not more, of complete uncertainty because everything that Trump needs to do could face legal challenges when it comes to tariffs. You know, he's got a 150-day runway to figure out exactly what he wants to do here. But if, you know, whether all the different authorities that he has in his tool belt, you know, they're much more limited in scope. Okay, is something a national security threat? Great. You need to put together a report, make that case. If you don't make a serious case there, you can almost certainly bet that someone is going to step in and sue and potentially delay that. So there's just all of the scenarios where we have where, you know, there's redhead crossing the terminal. Trump said he's going to impose a tariff on this country, on this good, you know, because he's mad about, you know, the trade policies or the geopolitics, you know, between the two countries. Those days are over. Now he's got to really think a lot more strategically and about how he imposes these, and it's going to take a long time, and there's not any certainty for any of the companies or trading partners who are trying to figure out what they need to do here.
And do we know at this point what tariff rate is still effective, when the 15% will become effective, and who is affected?
Yeah, so we know that the 15% will go into effect on the 24th, so Tuesday is that when that rate will go into effect. There are still some exemptions for semiconductors and other things. Some tariffs, all the things that are kind of sectoral specific, so things on steel and aluminum, on auto parts, those will also remain in effect. But sort of any of those kind of broad-based country-by-country tariffs, those are all now equalized at 15%. You know, we may see countries, if they're trying to get back in Trump's good graces, they agree to a little bit more. There's a lot of different levers here that the countries can pull, but you know, you kind of see everyone just kind of taking a collective step back and say, whoa, let's figure out what's going on. There was a Japanese official that described this as a real mess. That is really the case that's, I think, widely shared among everyone trying to figure out what's happening.
Yeah, Steve, perfect time to bring in you. What do you think some of the trade partners in the U.S. are thinking here right now, whether to renegotiate with Trump or not?
Well, I think they're reassessing that right now. The Indians, for sure, are they have that interim deal, which brought their tariff rate from 25 down to 18 and also eliminated extra 25% in the interim deal. They were heading to Washington this week. They've postponed that as an example. A number of different trading partners are kind of taking a wait-and-see approach because, as you, Laura, just said, rightfully, the sectoral tariffs are still going to be in place on steel and autos for the Japanese and the South Koreans. So right now we're hearing officials from Japan and also South Korea saying we need to assess what the ramification, what our leverage might be going forward as well. So I think there's this Monday morning, as we've come out of the Lunar New Year holiday in Beijing in particular, we're kind of in reassessment mode of what this really means. So I focus on Beijing because in 5 weeks' time exactly, Trump will be on Air Force One heading to Beijing for that big summit. He probably, and the conventional wisdom is that tariff cudgel, if you will, has been, wields less strength right now, because again, Xi Jinping will know that he cannot necessarily just ad hoc add tariff threats, which he did over the course of last year, upwards of 145%, and it vacillated quite a bit, so created a lot of chaos, a lot of uncertainty that gave Trump, in his mind, negotiating power. So we'll have to see. Again, the conventional wisdom right now from Beijing is we have to wait and see. State media has been very muted so far. They don't want to necessarily antagonize Trump ahead of that summit. They have their deliverables that they want out of the summit. So we'll have to kind of see. But the conventional wisdom, as I say again, is that this does weaken him in his negotiating strength, his leverage going into those talks with Xi.
And maybe, yeah, China emerging as a big winner in all of this as well. All right. Thanks to our team, Steve, as well as Laura, joining us on what this all means. Of course, we'll continue to digest what happens here across markets, of course, or what it means for companies, and, of course, as for how the world reacts to this as well. In terms of your agenda here for Greater China today, as we mentioned, mainland markets still shut. Hong Kong, of course, still trades here on this Monday morning. MSCI China, we're watching, of course, some key levels, including that 200-day moving average. So in terms of sectors, right? So watch out for like apparel makers, basically exporters, oil, given the Iran situation, Hong Kong property, which of course has been quite hot of late here. There has been some FTSE Hong Kong changes as well to tell you about, Dave. Also some data, Macau, January visitor data, and also there is that Hong Kong activist appeal ruling today to watch out for.
Yeah, on the legal front, of course, we'll be looking at that here in Hong Kong. And just to also mention the changes on FTSE Russell, and by the way, just to add to the data, we are in the window for FDI numbers coming through as well. Okay, just as broad brushstrokes, so effective, let's call it about a month from today, some changes in FTSE Russell, additions to Hong Kong. You're getting net additions, of course, to the large cap benchmark there, 70 plus or so on mainland. Of course, we're removing about 35 plus or so. We'll obviously look at the market reaction across Hong Kong when things open up in about 18 minutes from now. Right, just ahead, we continue the conversation here on tariffs and how the fresh uncertainty is weighing on business sentiment. Stay tuned for conversations with the footwear distributors and retailers of America and also AmCham Hong Kong coming through over the next hour or so. Counting down to the open first session of the week, the Monday one, 18 minutes away here in Hong Kong. This is the China Show.
One of my concerns about the whole way that the president has gone about these tariffs, apart from the fact that he overreached his presidential authority, is it's just created so much uncertainty, and today we have more uncertainty. Will there be refunds? How will that work? When will that happen? Will the 122 tariffs that he put in place today, it just creates a lot of uncertainty.
Former U.S. Commerce Secretary Gina Raimondo there speaking to us after the Supreme Court decision striking down many of President Trump's tariffs. That uncertainty certainly is going to be something that's going to be a theme, of course, for the next months or even a year, according to our Laura Davison here, when it comes to some of the legal sort of constraints and challenges that might be brought forward. But at least for now, the market reaction has been of relief, especially if you take a look at some of the Taiwan tech plays or exporters out there. So it seems like when you take a look at some of these tariffs, right, the reciprocal tariffs, it could be favorable for products that have been excluded from such tariffs, right? Like smartphones, PCs, the like. So Taiwan could be a beneficiary here. And you are seeing some massive moves around some of the electronic plays here this morning, Dave.
Yeah, it's 150 days, I believe. Yes. Based on the latest post coming out of Donald Trump and, of course, what the law provides for him as far as his legal sort of capabilities around this specific issue, the 15% specifically, of course, right? Let's get more on this. Joining us from Washington is Greta Peisch, partner at law firm Wiley, Rein. She recently served as the general counsel at the Office of the United States Trade Representative. And, of course, Greta, good morning from the Asia Pacific. Thank you so much for joining us. Quite timely, because you've also written already quite a reaction piece to the decision from the Supreme Court on Friday. I guess my question is very, very simple. What are the next steps from here?
Well, that's a great question. I think a lot of companies are asking about refunds, right? What is going to happen for all of those entries, many billions of dollars of trade that have come in, and the expectation that once this ruling would come out, if it did, in the importer's favor, that they would be getting those funds back. And I think there's a lot of questions now as to what the process will be and how long that will take.
And would this only include the ones that were the plaintiffs of these sort of, cases that were asking for refunds? Or do you expect this to be something more wide-ranging and more universal?
Well, again, I think that's a question that is left open. Certainly, there is the plaintiffs who brought this case. They have asked for refunds, and the lower courts, at least at this time, have indicated that they would have the ability to recoup those funds, and others potentially who've brought suits as well. But in his press conference on Friday, the president indicated that that was not a settled question and that the government intended to litigate it further. That could delay for those plaintiffs as well as all of the other importers who have funds at issue. And the one question will be, will every importer, essentially need to file a suit against the government in order to claim those refunds going forward?
Okay, the cessation of tariff collection specifically, Greta, I wonder if you could elaborate more on that, because people are wondering what is still in effect as we speak, and what then takes into effect on Tuesday. If you could just help us understand the nuance between those two things.
Sure, and it is confusing. The Supreme Court's order did not automatically terminate those executive orders. It really kicked it back to the lower courts, who, of course, on a Friday didn't have time to, process or put out further orders. But then the president sort of preempted that those actions by the courts by rescinding the executive orders that put in place the reciprocal tariffs and other IEEPA tariffs. But it left a little bit of a question of what's the actual end date of those reciprocal tariffs, because the order essentially said as soon as possible, Customs and Border Protection, other agencies should terminate the collection of these duties. So that's not a clear end date. And, as of now, it appears that CBP is still collecting those duties, and the orders are still in place as it undertakes the administrative and technical procedures in order to stop that collection and revert back to the prior tariffs that would have applied to the products coming in. So we're a bit in this gray area, and it is leading a lot of uncertainty, at the border, a lot of questions about when's the best time to enter products. Should they be held? Should companies and importers wait to bring them in? It causes a lot of chaos.
It certainly does lead to more uncertainty, as you mentioned, Greta. The use of Section 122, I wanted to ask you about the justification of that, because the U.S. Trump administration has said it was to address the balance of payments issue, like conditions of, whether they can actually deal with, this deficit of balance of payments or even a significant depreciation of the dollar. Do you think that there are grounds for that in any way?
Well, this is an untested statute. It's never been used before. It was actually put in place as the result of Nixon putting in a temporary tariff for that very reason, for a balance of payments, a purpose. And so, we don't really know how courts would look at the exercise of this authority and what kind of factors they would look like, and whether the conditions that are on the ground in the U.S. economy today would justify it. But the president has, set out his reasons in the executive order to invoke it. And because it is this temporary nature, only 150 days, I think, it's to be seen whether, in this case, importers will bring a case knowing that this authority will soon expire in any event.
And so Greta, a two-part question is, the 15%, is there any legal risk to the president as far as that's concerned, or does that stay for 150 days, just in terms of being able to give businesses and economies around the world some level of certainty? And what's next? What do you think? What's next for the White House here as far as this conversation is concerned?
Sure. Well, the authority that's being invoked, Section 122, it caps out at 15%. So it specifically says that a surcharge, an additional tariff of up to 15% is allowed using that authority. You can't go higher than that 15%. But that's certainly, if it's, a valid use of Section 122, it would be within bounds there. I would say we haven't actually seen an executive order yet that increases that 10% to 15%. We, of course, saw the announcement from the president that they the administration will do so. But as of today, that 10% increase or new tariff, which will come into effect on Tuesday, that's what's on the books.
Okay, Greta, thank you so much for sorting out, of course, all the legal nuances out there. Greta Peisch, their partner at Wiley, Rein, joining us here this evening. Take a look when it comes to how the pre-market is shaping up, of course, in Hong Kong. We actually are seeing quite a bit of tailwinds crossing through. Perhaps it's because of the broad dollar weakness that we've seen on the face of the Supreme Court ruling. Also, maybe just the idea of maybe lower effective U.S. tariff rates could be something that could be a relief to many Asian economies out there. So you are seeing Hang Seng up 1.5%. Futures are punching higher here this morning, 781 for Hong Kong dollar and 688. Some strength crossing through the Chinese currency here today. This is Bloomberg.
Right, welcome back. Markets here in Hong Kong are punching higher. No pun intended there to a mammal that's made its rounds on social media over the weekend. 1.5% to the upside, Hang Seng, 2%. So we were down about 4%, give or take, on the Hang Seng Tech on Friday, which is quite fitting, right? Because when you look at this chart that's coming up, the last time we were testing the support level was actually back during Liberation Day week back in April. We've since, of course, retraced from the peak, and we're now at this 200-day moving average. And the last time, as we saw back then, of course, it was April. The time before that was tariff scare right after the U.S. president was elected. And, of course, here we are, quite fittingly, of course, we'll see it. It looks like we're going to get a bounce going into the Monday session here today.
Yep, so certainly that's one thing to watch here. We're also watching in terms of what the Supreme Court ruling does to maybe some of the Asia apparel makers, right? That, the supply to U.S. brands like the Lululemons, like the Nikes out there. So after, of course, President Trump said he will increase these new tariffs from 10% to 15%. Not a whole lot of reaction for some of them here, but you look at Shenzhou International, we are seeing a pop about 4% here right now. So they could be some of the bigger winners here out there, given that some of the, some of these companies that are coming from economies and nations that are really had very high rates under IEEPA, like China. So certainly that's going to be one thing to watch.
Yeah, so everything from your red stilettos to your Jordans, maybe. We'll get into the footwear conversation in a couple of minutes and how that really affects, of course, things imported into the United States. Some changes, of course, out of FTSE Russell. These two coming up on your screens. Gold, obviously, has also been in play. We're up about a couple of percent there as far as gold is concerned. It's playing out across these two, and of course, Zijin Gold is also the gold price there. Broadly speaking, mainland markets are still shut. Japan as well. The state of play across equity markets this Monday. Japan is off highs. U.S. futures on offer. The rest of the region doing well this Monday. The open is next. This is Bloomberg. Welcome back. You're watching the China Show, counting down to the open of cash markets here in Hong Kong. Mainland markets reopen tomorrow. So I think we can talk about that tomorrow. It's a big week, of course. The Hong Kong budget, just in case you forget, that's also on deck this week. State of the Union, the U.S., a couple of big earnings, and NVIDIA's also coming out, I believe, next few days or so. So lots to sink our teeth into.
Yeah, and that's even before the whole sort of tariff discussion started here today. So today it is really all about tariffs and really what this means for Trump and the whole America First sort of strategy here. But it seems like, at least for now, Asian markets are at least taking it in stride. In fact, are actually sensing, breathing a sigh of relief in some ways, because does this mean when you eliminate IEEPA tariffs, does that mean we're talking about lower effective U.S. tariff rates across the board? It seems like that is the case, given some of the exceptions that we've seen, some of the carve-outs and the like. And certainly, you take a look at some of the tech plays, that is back in favor once again. As mind you, as we mentioned, right, Hong Kong is online, but really mainland markets are shut for a holiday until tomorrow. But right now you are seeing Hong Kong really liking this news. We're up, HS Tech about 2% after what we saw was a bit of a bashing on Friday. So Hang Seng is also up, getting close to that 27,000 psychological level here right now. Hong Hong Kong property continues to be quite hot here. We'll check that in just a bit. But we're watching some of the tech plays, right? Take a look at HS Tech. It seems like when you take a look at what China has emerged, right, in the face of the Supreme Court ruling, that maybe that it has been perceived as one of the biggest winners out there because they were facing some of the highest IEPA tariff rates here. You could put India in there in some ways, Indonesia as well. Brazil certainly could be some of the key ones that come out because essentially you're talking about 10% fentanyl-related tariffs have basically been in some ways gone, right? And you're just talking about 10% reciprocal tariffs now. So that certainly helps some of the tech plays, smartphones, PCs alike that already have been excluded in some ways. But look at how property is doing, right? It's quite interesting. JP Morgan coming out with a pretty positive outlook, even Goldman as well. They're saying that the property sector is set for a further recovery because you talk about a resilient stock market and there's a lot of pent-up demand from mainland Chinese buyers for private residential units. They call it FOMO sentiment after 3 years of correction. So upgrading Sun Hung Kai to overweight, we're up some 3% for that stock.
Yeah, here's a stat for you. 9 straight weeks. Weekly gains on the Hang Seng Property Index, the longest weekly run going back to 2003. And
we've got Hong Kong budget, too.
That's coming out, too, yeah. Right? And obviously housing is going to be a big part of the conversation, too. We're looking as well at some changes, of course, to FTSE Russell. I think it's MMG and Zijin Gold on your screens. There we go. So suffice to say, these two are being added. March 20, as of the close, is when that's effective. And we're also looking at some of these software, cyber-related stocks specifically. This follows the move from the U.S. on Friday. Not as broad-based as the declines we had in the U.S. We are seeing some, of course, down substantially. Megaport is listed, of course, in Sydney, and we're down about 13% on that. This is really down to Anthropic's Claude tool, the latest in this long list now of AI scare trades. To talk us through this specific and, of course, the broader outlook for markets, given the, should we call it, certainty over the tariff conversation, Helen Gu is with us here on set, Managing Partner and CIO at NF Trinity. Nice to see you. Good morning.
Morning.
Happy New Year.
Happy New Year.
The Asian markets seem to be taking this one in stride. Is this a correct market reaction in your view?
I think so. I think Asia and emerging markets are probably the biggest beneficiary of this temporary pullback in terms of tariffs. So there's 150 days before Trump needs to, reimpose something else, but probably going to go after 301 or 232 in terms of investigations and seeing what can be reimposed. But at the end of the day, I think, it'll be less versus what was on previously before the Supreme Court decision. And, this is actually a pretty good off-ramp for him, potentially, to lighten up a little bit because the U.S. has been importing so much inflation because of the tariffs, and it's hurting the low-end consumer, which is his core base, and you need to, give them some relief before the midterm. So I think he's probably going to reimpose less versus what was there previously.
Yeah, it's an opportunity, like an off-ramp, as you say, right, to remove some of the damaging parts of his trade policy, which is a good way to see it, a positive way. Should I still put a pretty higher risk premium on U.S. assets then, given just the uncertainty around what could happen in trade policy?
I think actually the markets kind of look past the trade issue, right? We're talking about a few percentage differences in terms of effective tariffs, and actually, it's been talked to death, and corporates have already absorbed it to the extent that at some point they get some refunds after all the legal cases die down. That's, a small positive, but not something that's going to be recurring. So I think people are much more focused on the broader landscape for the economy, how robust is the GDP growth, what the employment numbers look like, how does AI disrupt or help the overall productivity and asset markets, et cetera. Those things are probably taking more of a front seat versus just a tariff topic.
On the AI scare trade, is that an overreaction across markets or justified? How are you looking at that specifically?
I think it's actually totally justified because this is a medium to longer term structural thing. It's not a short term thing. And there's so many companies that used to trade at very high multiples on a price to sales basis because the visibility of their sales was considered superior to every other sector. And therefore, a great deal of terminal value was credited to these companies. And now suddenly people think, gosh, near term is okay. Everybody's locked into these 2 or 3 year software contracts, but who knows what things are going to look like. And previously, maybe there wasn't too much seat growth, but there was a lot of price hike year after year because of pricing power and lack of competition. But now, who knows, what AI startups beyond even just the LLMs are going to come up with in the next 6 to 12 months. No one knows. And therefore, the visibility goes away, and therefore the multiples have reset. And will probably continue to reset in some sectors of the market.
Will that show up in earnings, the upcoming earnings, or do I need to wait a few more quarters before the companies involved acknowledge that there is actually a lack of visibility?
I think some of the companies are starting to acknowledge it, but I do think that the earnings are probably still okay in the near term, largely because of the medium-term contracts, 2 to 3 year contracts for most software companies. And but you will start to see some slowdown in terms of their new orders and new contracts, and the market will immediately extrapolate that forward as well to maybe a less sustainable rate of growth, or maybe even at some point in the future some possible decline in terms of revenue. So that'll be reflected in the multiples much, much faster versus how fast it's reflected in the earnings or revenues.
I mean, the biggest disruption was software, but it was a clear signal that we really don't know what AI can disrupt, right? I mean, in terms of what you think could be the next business that could be upended by AI, I mean, how do you even extrapolate what that could look like?
Where do you start?
Well, I mean, I think most of the market concern and focus has been on the software space because that's the most immediate and direct. But over the weekend, with Anthropic's launch of some security products, security, which was previously thought of as very resilient and defendable, are actually is actually getting disrupted as well. But I think anything that's in the business services or anything that doesn't require a lot of hard assets to produce, like chemical plants, cars, etc., anything that can be potentially substituted with AI versus traditional human capabilities and be done, maybe not as well, but faster and cheaper, possibly. Maybe you can get 80% of the way there, and therefore some customers are happy enough with it, willing to trade down. I think all of those sectors will actually need to face a lot of reckoning and really consider how proprietary are their contents, how proprietary is their data, how replaceable are they. The previous moat there of, I've accumulated this many years of customer base or customer habit of accessing my app or, any of these things, that goes away because people can catch up really, really quickly. So I think the next wave will be looking at some of the internet verticals. People are worried about OTAs, for example, consulting, a lot of these other sectors that haven't necessarily been impacted in terms of share price movement to the same extent as software.
Can I ask you about EM generally speaking, and what's happening? Does it make sense to you that Korea's outperformed to the extent it has, and China recently underperformed to the opposite side of things?
I do think that the Korea rally is quite justified, and we've actually been positive on Korea since middle of last year. After the election in the middle of last year, the new government came in and became super proactive in terms of fiscal policies, as well as a lot of the capital markets related reforms. So, for example, reducing the dividend tax and capital gains and encouraging more retail participation into the domestic market, trying to get Korea into MSCI DM status versus EM by changing a lot of the FX and other related policies. And Korea's starting point was like 0.3 times price to book for a lot of sectors and like 4 times PE. And at that point in time, it had the highest dividend yield in the world at 6 to 8%. Plus, then they launched all these capital repayments and buybacks and so on. So that combination really got the market moving beyond just tech, beyond just Samsung and Hynix from the memory shortage perspective. But now after this 6 to 8 months of very aggressive rally, admittedly, it rallied a lot faster and more aggressively versus our earlier expectation for the front part of this year. So I think we now have to be a lot more selective. Financials, I think, are still quite okay. Some of the consumer companies are still okay. I think memory has run a bit too much. Probably the price, will still continue to inch up, and the shortage will remain for a number of quarters. But everybody knows over the medium to longer term, that's not necessarily sustainable because supply will catch up. So we're not chasing that part of the market. And I think also for some parts of the defense and others, it's probably gone up a lot already. So I would be a little bit more selective versus before. China, relatively speaking, I mean, the economy has been quite weak for quite some time. And we actually don't see that incrementally the policy front has been as aggressive of a move versus Korea. And so we think actually a lot has been priced in. And even the dividend yielding stocks like the major SOEs, they're no longer yielding anywhere near as much as they were before, and probably still 2 or 3% less versus Korea from a cash return perspective now.
How should I be looking at some of these AI pure plays in China? China, right? They seem to be defying this whole AI, disruptions and scare, that we've seen right now. Does it show you this diversion that you're seeing between China tech and U.S. tech? That just really what the AI landscape looks like in China to you, or should you continue to chase it?
I think China tech has really caught up with U.S. tech, right? In fact, we've seen recently the very buoyant IPO market in Hong Kong and quite high price-to-sales multiples for the recent IPOs, et cetera. So I think people's confidence in China tech has already returned in the public market, and that's actually been very helpful in terms of rejuvenating a lot of excitement in the private market and early-stage venture investing, et cetera, as well. But China and U.S. are two very different AI markets from many different perspectives, and a lot of the Chinese companies will have to look for new ways to monetize because, Chinese businesses don't have the same habits of paying hundreds of thousands of dollars for software as U.S. businesses do. So they need to think about, how to kind of potentially use what they build up onshore to move offshore in terms of monetization as well.
Helen, it's great to have you. Thanks for kicking off the week with us. Helen Gu there, Managing Partner and CIO of NF Trinity. All right, coming up, our interview with the CEO of the Footwear Distributors and Retailers of America after President Trump's tariff defeat at the Supreme Court. That's next. This is Bloomberg.
Right. Market reaction in the Asia Pacific. So this is a look at apparel and some of the stocks across that sort of footwear and apparel supply chain across the region. You have three, of course, listed here in Hong Kong. You have exporters coming up as well on your screens very shortly. On top of all this, I think if you had to summarize it, U.S. assets are weaker. You do have the extent to which there's a massive sigh of relief across markets in the Asia Pacific. Korea is up again. Taiwan is coming back online. That market is up substantially across some of the big names there. And here in Hong Kong, there we go, 3.5% to the upside. So it looks like this is something we'll be talking about over the next couple of hours or so.
Yeah, because I think what Helen Gu from NF Trinity said was, if you look at the flip side of all this, yes, there's a lot of uncertainty. Yes, companies are going to have to be dealing with maybe legal challenges and really deciphering what, 15% reciprocal tariffs are going to mean. But then again, this is a chance or even an off-ramp for the U.S. administration to maybe, take away some of the more damaging parts of their trade policy, right? So does this effectively mean lower tariff rates when it comes to most of these Asian nations? I think for the most part, if you look at China, you look at India, they certainly are maybe smiling right this morning, just taking a look at what could happen, right? Yeah. So certainly there's a lot of, I guess, there is a bit more clarity or maybe a lack thereof. I don't know.
Yeah, I'm still confused.
I'm still confused. For more, let's bring in Matt Priest, President and CEO of the Footwear Distributors and Retailers of America. So, Matt, I'm sure you've been talking to all of your members and the like here in the last, weekend. I'm sure you've been busy. What are the conversations like right now?
Yeah, great to be with you. The conversations have been fast and furious because a lot of our members have checks due to U.S. Customs and Border Protection this coming week. And so there's a lot of tactical questions and operational questions about should they pay these tariffs or not? And can we get guidance from Customs and Border Protection, which we expect to come sometime early this week? So our fingers are crossed. But right now, we had 325 companies on our call Friday as we just outlined and talked through all the different impacts that we'll see when it comes to sourcing footwear from these countries that you mentioned, Yvonne.
Matt, I know it's early days, but net is the message you're getting on aggregate, is this good news or is this bad news?
I think it's good news in a sense that it restores kind of constitutional order around which of the laws that Congress has passed actually articulate and authorize the President of the United States to pursue tariffs for a variety of different reasons. And IEEPA didn't seem to have that clarity when it comes to the actual law. But the fact of the matter is, since April 2nd of last year, so-called Liberation Day, our members have been scrambling to try to migrate maybe out of China to other countries like Vietnam and Cambodia and Indonesia. And as the dust has settled on the reciprocal agreements that have been negotiated, the rates, at least for footwear, are all the same. There was a 20% tariff in China, same in Vietnam, 19 in Indonesia, 18 in India. And so for all the movement around these negotiations, we settled on very similar rates as when we started, at least the playing field's level. So it seems to be a lot of activity to not really having a policy that surgically addresses our ability maybe to move out of China. In fact, our volume out of China in 2025 was the lowest since the Clinton administration. 49% of the volume sold in U.S. Shoe stores came from China. That's the lowest since 1991, or 92. And so it's this weird environment where we've had to do all these things, and it just kind of settled back to what the status quo was.
Right, and they kept saying that the Section 122 tariffs are really intended to be a temporary fix. I think Scott Besson said it's more of a bridge than any sort of permanent facility. What happens after 150 days? How long do you think these conditions can last, Matt?
Yeah, we suspect that they will start to move with some of these other sections, right? Section 301 and 232, the sections that they have been using. And a section, we got hit by 301 tariffs in September of 2019. But the president stated very clearly over the summer last year and publicly that he's not looking to make shoes in the United States anymore. So you've been discussing maybe this off-ramp opportunity. I don't think the administration will walk away from tariffs by any stretch of the imagination, but maybe as they start to move down these other maybe initiatives or these other investigations or using these other sections of the Trade Act of 1974, that they won't focus on these low-value goods that we're producing all over the world. 99% of shoes sold in the U.S. are made overseas. And the president has said very publicly he doesn't think we need to make more shoes in the United States. And so if that's the case, maybe we have policy moving forward, even beyond the Section 122, that doesn't target items like footwear and apparel that Americans aren't making and are not looking to make anytime soon. And so that's our hope, is that maybe that is the off-ramp. It creates a little bit more nuance for the administration to navigate through these choppy waters.
And Matt, does that ask resonate as you guys lobby as far as that specific interest is concerned there in Washington?
We've been at it for a long time, David, and we've been lobbying, and we've gotten a lot of feedback that, yeah, this isn't a top priority, but the president loves his tariffs, and we've seen that play out time and time again. Look, I think the president's trying to create leverage. Most presidents and U.S. trade representatives want leverage when it comes to trade negotiations. The challenge for developing nations and those that export large volumes of apparel and footwear is that this is going to be their top export. And so there's going to be leverage around those products. And so we're at this place where we hope that the administration is continuing to maybe strike some of these deals and that they provide even more carve-outs for products like footwear coming out of Vietnam, for example. And we think there's an opportunity there. And then they can focus in on what they think is important for national security or heavy manufacturing or high-value goods through these other channels as it relates to different sections of the Trade Act. But it remains to be seen just kind of what their next steps are beyond the Section 122.
Yeah. What about in terms of refunds? I think have a lot of your members, have they been plaintiffs in this case? And what do you think is going to be the legal process it's going to entail to actually get some money back?
Yeah, that's a great question, Yvonne. I mean, we've had some of our members that have been plaintiffs in these cases. A lot of them have not been. Our expectation is that as the Circuit Court of Appeals and the CIT start to articulate what the process looks like, that we'll have the normal avenues available to us to go and get those refunds and file protests and have even interest paid on those refunds as time allows. And so do we expect it'll be an easy process? No, but our members have been preparing for the last several months, pretty much since the start of this case as it's made its way through the Supreme Court, to make sure they have their documents in place and they understand how much they paid when it comes to these IEEPA tariffs, and then what that number is, and then how to engage. And our hope is that with the courts and with Customs and Border Protection, that the administration hopefully will quickly avail some kind of opportunity to seek those refunds. Because my encouragement to the president and his team is that, can you imagine, the economy's doing pretty well right now. Can you imagine if we unleash that, $200 billion back into the U.S. economy very quickly and allow that to start to work through the economy, how even greater our economic growth might be. And so our hope is that they'll do that expeditiously.
Matt, thank you so much. As always, we appreciate you taking the time. Of course, I know it's getting late where you are. Matt Priest there, President and CEO of Footwear Distributors and Retailers of America. Right, if you're one of our subscribers, you can rewatch that specific interview on our interactive TV function on the terminal. Check it out. TV Go. Right, welcome back. You're watching The China Show. It's almost like muscle memory this time of the day when we have a look at our board, of course, here to my right, and the big movers across the benchmark today. So we are getting a bounce this Monday morning following the almost mirror image, but the opposite on Friday. Let's call it offset most of the losses there. So big tech plays on your screens. Tourism, of course, we're getting some initial numbers coming through here in terms of the retail spend during the holiday. That, of course, the holiday ends today, so markets reopen tomorrow.
Average Baccarat minimum bet was 2,347 Hong Kong dollars. This is according to, of course,
the average bet.
This is what analysts have been kind of calculating here, which is a 5% increase from the CNY last year. So there is a recovery in grind mass as well. This is according to, of course, some analysts out there. So premium mass, they say, remains strong for some of these Macau casinos. We're also watching tourism stocks like airlines and the like here as well. So certainly one thing to watch. Crypto. Oof. Have we moved on? We'll see. But crypto is how, there you go, Bitcoin sinking some 4.5% here. Mixed bag here across some of the crypto plays here. Huobi Tech is actually up some 4%, but we continue to see a bit of cratering here when it comes to the Bitcoin price. This is Bloomberg.
I think until you get some way for U.S. consumers and especially U.S. companies to come out en masse to say this is not acceptable to us and we're looking for serious changes, we're going to continue to have tariffs. And you saw that while we revoked IEEPA on Friday, by today we already have 15% tariffs that are supposed to be in place. So there's no relief in the headlines, at least, for consumers or for U.S. companies who are dealing with much higher tariffs.
Tariffs have really lost most of their edge as leverage for the United States. And so if you look at that as the first truce in the U.S.-China trade war of 2025 or Trump 2.0, tariffs, then that was a front on that war that was fought to a standstill. And then the trade war moved to other areas, things like export controls and sanctions. And this is a case where also both sides have demonstrated they've got potentially significant leverage over the other, and they've largely fought to a standstill.
The Supreme Court's order did not automatically terminate those executive orders. It really kicked it back to the lower courts, who, of course, on a Friday didn't have time to, process or put out further orders. But then the president sort of preempted that those actions by the courts by rescinding the executive orders that put in place the reciprocal tariffs and other IEEPA tariffs.
Some of our guests there today weighing in on the fresh U.S. tariff uncertainty after the Supreme Court decision. Markets, though, are just as clear as the skies out there here today. Actually, it does look a bit cloudy, but there seems to be a bit more, at least, optimism, of course, around Asia on what this sort of, move from the Supreme Court really means, right, for most of these Asian nations and maybe some of the U.S. trade partners in this part of the world. We mentioned the markets are taking it in stride in some way. It's a sigh of relief. In some ways, look at the Hang Seng. We're back above 27,000 now as we kick off the year of the horse. There's certainly going to be uncertainty on what the next 150 days and what after that look like. But for now, it seems like we're pretty happy about where we stand.
Yeah, I mean, if any, you're right. If any, it does, and it's early days, right? It does seem to add to just this push of rotation out of whether that's within the U.S. or outside or going out of the U.S., for example, this whole U.S. the end of U.S. exceptionalism trade, and this certainly does add to that as well. I'm now curious what that speech is going to be like tomorrow, the State of the Union, because that's Congress. You have members of the Supreme Court actually also tend to attend, of course, that one. So we'll see what the U.S. president will have to say around that. But the message from markets is quite resounding, right? So it's good for risk assets, temporary reprieve here. Risk appetite goes. When you look at Chinese markets, they're doing exceptionally well today. Hong Kong markets, of course, China reopens tomorrow. Mainland China reopens tomorrow. As far as the sector groups that are really catching the strongest tailwinds today, the top four across ex-Japan on your screens right now. So IT is doing well, financials, energy, and industrials. Okay, now in fact, we're looking at consumer discretionary. Commercial services, IT, and materials are actually the biggest moves that we're seeing today. Anyway, dollar on your screens, to the point we were making earlier on. We were looking at Iran, by the way, which was one of the things, focal points of markets going into the weekend. So far, not much developments as far as Iran is concerned. So markets removing some of the risk premium built into weeks and weeks of the crude markets, and gold, of course, still seeing some upside. And not to say, of course, markets are not watching Iran, but it's certainly been overtaken by the tariff conversation.
Yeah, I mean, this has seen by the Supreme Court, this move, the most consequential sort of rebuke of Trump's second term. So obviously there's going to be a lot of questions of what companies, what trade partners are going to be dealing with, how they're going to approach trade deals moving forward with the U.S. Is there going to be more renegotiation of some of these trade deals as well? We've already talked about the likes of the EU, have contemplated whether to halt their current trade deal as well with the U.S. But this whole kind of protectionist wall that Trump administration has built seems to be like it might not look the same again moving forward. Yeah, I mean, the Trump card, the leverage that going into a few weeks' time, right? He heads to Beijing. We have some dates on that as well, and it does seem that hammer doesn't wield as much or it's quick enough,
right now.
Like the ability to quickly respond to what happens geopolitically as well.
Yes.
That he might, the Supreme Court may have really stripped that sort of leverage from the president. That's
a good point. I think Matt Priest brought it up, our guest in the last hour, that this in some ways is good news because it restores the constitutionality of the ability of the president's powers as it pertains to this. What is confusing, though, is the number seems to be changing by the hour. But what's clear, ironically enough, is his willingness to tariff the world, right? And I think what does that send as far as the foreign policy message is concerned? That is just to say markets in the region are taking this in stride. U.S. assets, as we were pointing out, under pressure. Our MLI strategist, Mark Cranfield, is with us out of Singapore to talk us through this. Mark, does the market reaction make sense to you?
I mean, who cares about tariffs when there's insatiable demand for chips made by the big companies in Asia? I mean, tariffs is just noise. No, I mean, seriously, you look at the return of the Taiwanese market today. Taiwanese market is flying today because they've seen what Korea did in the past week while they were on holiday. Not only is there incredible demand for these chips which feed into the AI story, but companies have pricing ability as well. They're able to raise the prices to improve their revenues in the months ahead. That is a much bigger factor than any noise we had over the weekend about tariffs. But speaking of that specifically, where investors are taking some heart is the fact that countries may now have wiggle room to negotiate with the United States. So already over the weekend, we've heard that the European leaders are considering delaying ratifying the trade deal that was made a few months ago between the United States and the EU. So if they are willing to push back possibly there, that means that other countries may be considering the same. We've heard that Japan and South Korea are looking closely at the details to see where they stand on the trade deals that they've had. This is what investors are most interested in, is the specific trade deals between countries and the United States and whether there is any room for those countries to get an even better deal than they may have had the first time round. The bottom line really is that most traders and investors now will see this as meaning the threshold is that tariffs are not going away, but the pain threshold is probably somewhat lower. And as you were saying earlier, there's less chance now that they will get ratification within the United States for Trump to be able to do whatever he wants in terms of imposing tariffs on other people. So at least potentially the worst days of this scenario are now behind us. and people can look at a slightly easier, confusing, but a slightly easier scenario in the months ahead. In the meantime, as you're also saying, assets are shifting away from the United States to other places. This is yet another reason for people to sell the US dollar, buy precious metals, look to diversify their portfolios away. And when Chinese markets reopen tomorrow, you'll probably see more money heading in that direction, because clearly China is trying to invite people in there. Look at the yuan, so strong, even in the time when China has been closed. So money's moving to Asia. It will probably move to Europe. Over the next few months, we'll probably see more funds disappearing from the United States assets.
What about when it comes to precious metals, right? You talk about gold, talk about silver, off to a pretty bright start this week. How are people positioning around that trade now?
Well, it's really fallen into place nicely for people in the precious metal space, because we saw that huge spike in January. Prices got really overdone. Market was getting very speculative. Positioning has dialed back a long way. Going into this week, traders have cut a lot of net long positions, so they're able to rebuild with this. Plus, we've also got the uncertainty around Iran as well. We still have a very big buildup of US military in the Middle East. Trump is still threatening action against Iran. That's again supportive for precious metals. So you have a weaker dollar, you have the situation in Iran. All of that is good for the gold and silver especially, and traders are not as long as they were going into the same period as we had back in January. So easier for them to build up positions as they look at the news around them, which is all good for metals.
Yeah, but it seems to be the opposite for Bitcoin. We're down 3,000 on the price there, Mark. I think we're down 50% from the peak. I wasn't going to ask you about Bitcoin. I want to ask you about NVIDIA, because, results are a few days away. And I remember just very recently, right, when results were, out within a few weeks window, people were already obsessing over the numbers. Should we be worried that we're not spending a lot of time over obsessing over NVIDIA's earnings coming through in 3 days' time, Mark?
It's still a major event. There's no question about that. They're such a huge company. Their revenue numbers are massive. They will have an impact. But it's not as important as it was at certain times last year. When you consider that Samsung Electronics, SK Hynix, Taiwan Semiconductor, these are the companies that people are very excited about, not to mention a few of the names in China as well. So the world is getting increasingly excited about what is happening in other places besides the United States. So NVIDIA, yes, very important. There'll be volatility around it, but it doesn't carry the same weight as it did 6 or 9 months ago.
Mark, thank you. Mark Cranfield there, our MLive strategist there, on what to expect this week as well. But certainly, NVIDIA earnings are going to be front and center. Maybe not as much as before, but certainly we'll see how this all fares. But China, of course, reopening could be a big one tomorrow. Well, more on of course, the renewed trade uncertainties in the next hour with former USTR officials Claire Reid and Kellyanne Shaw. That's coming up on Insight with Paz. This is Bloomberg.
Right, welcome back. Big story in town, this tariff conversation. In the smallest chance that you missed it, the U.S. Supreme Court, of course, struck down Trump's tariffs shortly after Donald Trump came up and said 10%. Shortly after that, he then went to 15%. We're parsing reaction right now across the Asia-Pacific, where you have a number of economies and countries just revisiting their positions, what makes sense right now, putting things on ice. Let's get a sense right now, the lay of the land across the Asia-Pacific in terms of reaction to this. Rosalind Matheson, our chief Asia correspondent, joining us right now for where we are. Yeah, Roz, why did you get us started?
Well, a lot of different implications potentially across the region, but, the status quo might remain for a lot of countries. The US is saying it expects these trade deals to stick The only one potentially breaking ranks at the moment is the European Union. India quite wisely saying they're not going to send a delegation for further talks on the interim trade deal that was reached just yet. That's not signaling anything more than they just want to take a beat and see what's going to happen in the coming days with this new trade framework that we're going to be dealing with for about 150 days at least or so. But economists saying that they expect India potentially to be a beneficiary of all these changes. Lower tariffs for India, possibly also for China. I mean, the fentanyl tariff has gone for a start, and so, you know, all the tariff rates average out for China will come down. Morgan Stanley expecting them to come down to about 24% for China, so a big winner there. And also leverage for China gaining. So Trump doesn't now have the ability to threaten higher tariffs just on a whim against China for various things. So, and China knows that going into this meeting that's going to happen in a matter of weeks between Xi Jinping and Donald Trump. But they also want that meeting to go well. So you can see quite a muted response so far from officials in China to these developments, but probably relishing what they see as an opportunity here.
In fact, Roslyn, as you were speaking, we did get the first official China reaction, right? So they reiterate that it opposes unilateral tariffs, but they says to keep a close eye on subsequent U.S. trade actions. Talk a little bit more about this. I mean, they're weeks away from President Trump meeting with President Xi. Has the Supreme Court essentially stripped out a lot of leverage for President Trump here? How should China be approaching the trade relationship now?
Well, that's right. You can see quite a muted response, very careful language from China. They're very general. They probably don't want to be crowing too much in the minute. But as you were saying, like really removing that point of leverage, because Donald Trump's gone up, threatening tariffs against China and then down again, and used it to say, if you don't buy more soybeans, for example, if you don't do this, if you don't do that, I'm going to put tariffs up against you. And that's really something he can't do anymore, because the court has said if that's not something that he can just threaten in the current framework. And so all of that leverage potentially is going. Will China now start to press the advantage in that meeting? Will they say, well, actually, we want this instead. We're not going to, agree so much on rare earths, for example. We want this for market access for Chinese companies. But again, Xi Jinping does want this meeting to go well. He doesn't want Donald Trump to come away feeling like he's been had by Xi Jinping in the minute. It's in China's interest to have this to be a smooth conversation and everyone to feel that they got something out of it. So quietly, they might be changing the goalposts on what they're going to be looking for and asking for in those conversations, but they're not going to do it out loud.
Roz, thank you. Our Chief Asia Correspondent, Rosalind Matheson there. I just want to recap some of those lines that came through. As, of course, Roz mentioned, it's pretty measured words from China so far. So they're repeating their calls for the U.S. to remove unilateral tariffs, but also reiterating it opposes those tariffs. And they are keeping a close eye, of course, on the moves moving forward from the U.S. trade policy is concerned.
Let's bring in Sally Pang with us here on set, Vice Chair at AmCham Hong Kong, who perhaps like many on the street has barely had a weekend. But thank you for joining us. It's Monday. Did you get any rest over the weekend? How was that like for you?
Not so much. Lots of calls, and particularly with emergency board meetings, which I just came off one. For MCHEM, particularly our member, many of them has large sourcing positions in Asia. Right. So it's a lot of goods, consumer goods, apparel, footwear, anything they can think of. Still, shipping to the U.S. They're the one who actually paid the tariff, and they're the ones that were really concerning what's going on. They're going to embrace another wave of uncertainty, to say the least.
Is it in some ways still status quo given the uncertainty then? Or what's changed, what hasn't changed, do you think?
That's a good question. I know that you had talked about a lot of things that have changed, is mostly related to the IEPA ones. So these are the fentanyls as well as the reciprocal ones. But the things that it doesn't really change. I have calls with the companies, board members saying that it looks like we're going to take everything go back to zero. That's just never going to happen. I agree with many of people who have said before me is that tariff is here to stay. The ones that are gone, we're all now looking. Number one question is how do you get refund? Everybody all expect refund, but how or when, which is silent in the Supreme Court's rulings. But that's the number one question. For many of the companies, those refunds are going to affect their P&L quite quickly as well. So they definitely wanted to manage that. The ones that not change, if you look at 232, the steel and aluminum, is still there. And not only that, it's actually compounded to whatever things that President Trump is currently announcing. And 301, if we focus on China, is still not changing. It's been around for years, starting 2018. Particularly sector tariff is very related to product. If you're in EV cars, batteries, solar, or in the semiconductor, you're still going to be paying quite high duty as well.
Does it make planning businesses easier?
I think the smart companies, the ones that we work with in Chamber, they all have a tariff task force ready for a long time. Okay. So they know how to play the scenario out, right? Tariff, unlike tickers, is up and down. It's actually can be quite scientific. It's a number. So they already have these game plan, or what we call playbooks, ready as to 10% and then 12 hours later become 15%, how much that really does change their position and that impact their bottom line. So most of the company that we work with are quite savvy at this point in time.
What are some of the unintended consequences that we might not be focusing on right
excellent
now?
Ones. The ones that we're seeing is that as we in sourcing industry, we know that a lot of people adopt the China +1, +2 strategy for quite some time now. But we're now seeing a lot of companies actually thinking about sourcing back to China. And this is perhaps not 100% due to tariff. A lot of them is because the AI movement, particularly related to the robotic, the improvement in the industry process that make it much more efficient to produce product. And it costs quite competitively if you consider the current ones the current tariff that China is getting. So we are seeing quite a few companies are thinking about maybe I would just go back to China where the supply chain is much more stable and the price is still very competitive as long as things are going the ways that they're planned.
How close are these companies to pulling that trigger? Already,
we're seeing them already.
Okay, right. Can you give us a sense? I know you can't get into specific company names, but you mentioned AI. What parts of the AI value chain are already sourcing from China?
We're seeing a lot of those like electronic parts that currently in China there's a lot of lights out factory, so they can probably produce goods much faster with higher quality with shorter period of time, and I wouldn't say lower cost, but at least a very competitive cost. Those are the ones that company that wanted to source back to China. They move out, David, because some of the tariff issue. But now, if you're looking at the total costs from China may not be as high or as bad, then it makes sense for them to continue to go back to China or even stay to China. They may have some plans about moving out because tariff issue, but that plan just so far has been tabled.
Interesting. Can we also just assume that tariff rates have peaked now, moving forward?
It's hard to say. I think with this administration, everything can change. I think that, as everyone will tell you, that tariff here to say we're going to see a lot of more focused tariff action on product specific. You have 232 are coming more, and then 301 can come more as well. And these can be a large number as well. It's not going to be a small number like 5 or 10%. It could be quite big. It can be big.
Sally, thank you so much for your insights.
Thank you so much for having me.
Vice Chairman at AmCham Hong Kong here. And a reminder, of course, of our new online feature, which is our Bloomberg Video Hub. Subscribers can explore live streaming, news, and interviews, all our Bloomberg TV shows, including The China Show, documentaries, reporter analysis, and more. Make sure to check it out at bloomberg.com/videos. In some corporate news this morning, the U.S. Justice Department investigation of Netflix's $72 billion offer for Warner Brothers is set to include scrutiny over the streaming giant's business practices. Sources say officials are looking into whether the deal may create a potential monopoly. It's the strongest signal yet that the Trump administration is going beyond a standard review. Any possible delay may benefit Paramount's rival bid. Bloomberg has learned that OpenAI expects sales to top $280 billion by the end of the decade. The forecast reflects the AI developer's strong momentum in subscription sales to consumers and businesses. OpenAI also recently began testing advertising to some users as a new source of revenue generation. The CFO, Sarah Friar, recently said the firm's annualized revenue last year topped $20 billion.
Right, let's have a look at some of the robotic-related stocks coming up on your screens. Of course, this is a partial list because you don't have mainland China up and running today. A note coming through out of Morgan Stanley in terms of the outlook and remaining optimistic over that specific group of stocks. And we're about, now 2 weeks divorced from that exceptional display of dexterity during the Spring Gala, the Spring Festival, of course, in mainland China about a week or two back. Right, speaking of the holidays, we're looking at casino stocks also coming up on your screens. We have some data coming through today. We have some data coming through as well on, Yvonne knows better than me on this, the inflation on the average Baccarat bet.
Yes.
Over from last year.
It's increased a little bit here. So there is a bit of recovery, according to analysts here, when it comes to
the data that we look at.
Premium mass. I mean, yes, the data that we look at here has a lot of subsectors, including when it comes to the likes of travel trends as well. So even like Hainan offshore duty-free sales grew. So certainly we're watching those very closely. A mixed picture across some of the Macau casinos here this morning, though. Metal stocks, of course, we're tracking precious metals once again. It seems like it is having a pretty bright sort of start. There you go. Zijing Mining up 5, close to 6%. We talked about the FTSE changes as well. But Hang Seng is certainly continuing to rally here today. But as Mark Cranfield told us, right, you have two sort of tailwinds when it comes to precious metals. The dollar weakening when it comes to tariffs. And then when it comes to the Iran situation, maybe more fuel for the precious metals trade here. This is Bloomberg.
I think Asia and emerging markets are probably the biggest beneficiary of this temporary pullback in terms of tariffs. So there's 150 days before Trump needs to, reimpose something else, but probably going to go after 301 or 232 in terms of investigations and seeing what can be reimposed. But at the end of the day, I think, it'll be less versus what was on previously before the Supreme Court decision.
That was Helen Gu there just about an hour back. In terms of her phrasing of this market reaction, makes sense in the Asia Pacific. So it's bullish for Asia. It's not as much the case for U.S. equities, and that's exactly how Asian markets and cross assets are actually trading at the moment. Just keep in mind Japan is shut, as with mainland China, so we'll get, of course, the broader cohort when things come fully back online the rest of this week. Right, very quickly have a look at how some of the consumer-related names are also up and running, coming up on your screens. There we go, really on the back of more for one, of course, the broader rally we're seeing today, and number two, of course, some of the better numbers coming through as far as spending and travel data and travel volumes and everything in between there as we wrap up, of course, the very long holiday this year there.
Yeah, CCTV, I think they said retail sales grew about 8.6% during the Chinese New Year holiday. So certainly some pretty decent numbers during, of course, this week-long sort of holiday. I certainly saw it when I was in China for most of my holidays. So lots of people. Tourism, inbound tourism.
Was it?
Oh,
yeah.
Everywhere you looked. You take a look at some of big events due this week. You take a look, of course, the big one's going to be the State of the Union address from President Trump as he heads to D.C., right, on the back of the Supreme Court ruling. Also, of course, on the back of these new tariffs that he imposed in the last couple of hours or so. So certainly that's going to be the key thing to watch. Among all those things that you're seeing, focus on things like NVIDIA earnings. That could be the big one, although maybe the markets are not as obsessed as they were. Previous results. The Hong Kong budget could be one thing, given how hot property stocks have been here and people really calling for a recovery. I think the likes of JP Morgan saying, look, there's a lot of FOMO among pent-up demand from mainland investors and buyers here after 3 years of correction.
Yeah, I think Sinung Kai was up substantially, right, in the early goings on the back of that too. So yeah, we'll see how that's framed as far as the Hong Kong budget is concerned, of course, around mid to the latter part of this week. Right. Speaking of inflation and the treasury markets and the largely non-event so far as the tariff conversation is concerned there, it's really more about what's been happening fundamentally. On your screens, of course, the stubborn PCE keeping, of course, what's been taking place in the treasury markets, keeping a floor underneath that as far as that's concerned. And, of course, bottom of the screens is core PCE. And as you can see, if you glean closer, you'll see that, of course, slight uptick in inflation. Now, do we call that inflation coming back, or is that remaining in check as far as a tighter range in this new normal of inflation is concerned. Joining us now is Brandywine Global. They recently cut its net U.S. Treasury holdings out of its Global Opportunities Fund, exiting 10-year positions, trimming 5-year ones as well. The fund has been among the top performers, of course, this year and over the last 12 months. As you can see on your screen, that's how it's done year to date so far. Joining us now is Jack McIntyre, Portfolio Manager at Brandywine Global, joining us out of the East Coast. Can I just ask you, Jack, before we talk about markets, what's the weather like where you are? Because we just keep seeing news headlines coming through, and it's looking nasty out there.
Yeah, and it is, and it's what they call, this is heart attack snow, meaning it's very heavy, it's very wet. So, the minute I wrap up here, I got to go back to shoveling. So.
Oh, my goodness. Okay. Hopefully you get a break with us and being away from the cold. I know what that's like, Jack. When it comes to your position on U.S. Treasuries, tell us a little more about the rationale on what's behind it.
Yeah, so the starting point is it kind of came into this year thinking we're probably going to be in a range, looking at the 10-year part of the curve, 4%, maybe 4.5%. When we're kind of hovering close to that 4%. So hard to come up with a real strong value argument on owning a lot of treasuries in here, particularly being global. We can allocate to other parts of the world we find more attractive. But remember that the second year of a presidential cycle, so the year they have the midterm election, historically, it's a strong growth environment right now. So, if that's the case, and I suspect the Trump administration is going to want a strong economy going in the midterm. So there's a little bit of a risk of, hey, that we overheat a little bit, that maybe, we need to start seeing a little bit more hiring. So, and then lastly, and we'll talk about the tariffs, that, hey, if this persists, then we get less revenue coming into the federal government, and the bond vigilantes aren't going to necessarily like that. So everything kind of points towards that we might see yields move higher in here. I'm not super bearish. I just think we might move up to that 4.5 range, barring any continued really major sell-off in risk assets. If that doesn't happen, I feel more confident about yields moving higher.
And Jack, just in the context of the State of the Union, and of course how the president's going to frame the state of the economy, you mentioned, of course, hopefully is one that is stronger going into the midterms. Is it strong enough that you think the Fed might be able to sneak in a hike as the next move? That's certainly come up as a tail risk recently. Where's your head on that?
Yeah, so it's fascinating because when you look at the makeup of the FOMC right now, I don't think this has happened before, but maybe it has and I just missed it. But there's a major divide. The permanent voters, so the board members, the governors, the Fed, the head of the New York Fed, they're all very dovish, but the bank presidents are the ones that are kind of saying, hey, wait a second, we see growth and we should be tightening. So there's a little bit of a kind of a battle going on. I would put more weight on what the governors say, and they're more dovish. So I don't think we are close to a rate hike at all. Having said that, the way we get there is that they stop easing for an extended period of time. And right now the market's got about 2 rate cuts the rest of the year. So if the data warrants it, the Fed's going to just be on hold for longer than eventually, if they have to cut or have to hike, they will, but I don't see that happening anytime soon.
Okay, so if the U.S. is not the destination, what else is more attractive to you now, Jack?
Yeah, it's really almost anywhere but the U.S. right now. Everything is aligning up, and I like Latin America. We talk about bonds that we actually like. There's yield to be had. There's too much inflation getting discounted into their bond markets. They've got much better balance sheets right now. So the term premium is well behaved. So that's an area that we like. But by and large, being a global bond manager, our 2 levers of generating returns are bonds and currencies. We expect to make more money on the currency side than on the bond side right now. But there are some bonds, particularly in Latin America, that are continue to be attractive.
Jack, are you still sleeping well at night? My understanding is you're unhedged there. Are you happy with the currency outlook? Is that stable enough in LatAm for you?
It is. Having said that, we actually just recently hedged our Mexican peso exposure because it's done well. I'm not telling you anything that we don't already know. People still like Latin America. Having said that, I think this is a multi-year trend, and it goes back to U.S. dollar weakness shouldn't be just a 2025 event. I think things are lining up where it's going to persist. So that's going to be a tailwind, again, for non-U.S. Markets, but Latin America in particular.
And you mentioned the tariffs. What implications would that have on the bond market, if any?
So, yeah, Yvonne, it's a good question right now, and it's early. It kind of reminds me of where we had a lot of complacency. Now we're back to tariff uncertainty. You go back, you look at what markets did almost a year ago around Liberation Day, and you saw a lot of angst around that. Dollar weakness, equity markets selling off. The bonds are getting a little bit more volatile. But what I'm trying to reconcile is that if we see lower tariffs, is that good for inflation? But then lower tariffs mean lower sort of revenue coming into the federal government, and the bond vigilantes are going to say, wait a second, we needed a higher term premium if that's the case. So, bottom line, I'm not viewing this as a game changer. The tariffs, Trump loves tariffs. It's his favorite word. That's going to continue to be the case. Things are just going to get pushed off a little longer, and they've got a number of different ways to generate tariff revenue.
Jack, just your thoughts on can I just ask you about the AI? Because we've had AI scares in the equity market. I know this is more a credit question, and I wonder, there's a ton of supply, there's a ton of fundraising that needs to happen, of course, to fund all these capital expenditures. On the other hand, though, we're seeing early cracks in the equity market of, some sectors that might just be in just deer in the headlights because of this AI trade. Is that showing up at all in the fixed income markets?
David, that's a great point, because it is. Maybe not directly per se, although we've seen these companies shift from being able to fund out of cash to having to borrow. So, we are seeing more supply. So that's competing with Treasury yields as well. But really, the way I'm thinking about it is that there's been a huge concentration of wealth tied up in these names. It's been the right place to be for the last several years. But if we're really starting to see a change, and I think we are, then that's going to be potentially a big drag in terms of financial conditions. It's going to that K-shaped economy. It's going to feel, the asset owners are going to feel this. So this, even though we don't own treasuries right now, this is the thing that gets me a little nervous if it persists, because that's going to be a big tightening of financial conditions, and that ultimately would probably be a net positive for bonds. But right now, we're just still looking at some of these stocks as just sort of being corrective, but very much keeping an eye on them.
Jack, great to have you. Jack McIntyre there, portfolio manager at Brandywine Global. Stay warm when you go out shoveling snow after this interview. But yes, always great to have you back on the show. We've been talking about, of course, continuing when it comes to tariffs. We did speak with former U.S. Commerce Secretary Gina Raimondo. She welcomes the Supreme Court decision striking down President Trump's tariffs. Speaking to us shortly after the ruling was released, Raimondo said the president's landmark economic policy has created a lot of uncertainty for businesses.
But I think the really important message of today is that the system of checks and balances in this country worked. And if anything, I think it makes America stronger. If anything, it gives us even more leverage in the world, because it shows the world, it shows global businesses, our judiciary is independent, it enforces the laws. And, you asked me in the beginning, what will Trump do? He seems to still want to go ahead with tariffs, but now he's going to have to do it in accordance with the law, which shows the world and our allies our systems are working, the judiciary is working, and we're a stronger country because of that.
Well, when it comes to China, you think about the stance of some of the other nations in the world. Mexico, for example, has already raised tariffs on China. A French government advisory panel just this month proposed tariffs on China, hikes coming from the EU. Do you see any room here for a coordinated move by the West against China when it comes to some of the overcapacity here? And do you think that that's something that you would advocate for?
It is certainly true that in order for the United States to effectively compete with China and their distorted trade practices, we're strongest when we work with our allies. I was in Munich last weekend at the security conference talking to a lot of Europeans. When China subsidizes a particular product and then dumps that product into the global market, it doesn't just hurt America. It doesn't just hurt American workers, consumers, and farmers. It also can hurt Europeans and Mexicans and Canadians. And so it's definitely the case that we would be stronger working with our allies to combat the unfair, in many cases unlawful practices of the Chinese government.
And Gina, I also want to ask about what we're seeing on the domestic front when it comes to some of these multitude of companies that have filed suits against the government, basically trying to secure a refund for these tariffs. As of December, you are a board member of Costco. And I'm curious, when you think about the process ahead of us, what is the kind of timeline that you're thinking about? Certainly we saw from Justice Brett Kavanaugh today saying that this is going to be a very messy process. Is that your expectation as well?
It is. Look, it's hard to know. This came down a few hours ago. But one of my concerns about the whole way that the president has gone about these tariffs, apart from the fact that he overreached his presidential authority, is it's just created so much uncertainty, and today we have more uncertainty.
That was Gina Raimondo, their former U.S. Commerce Secretary, speaking with Bloomberg's Katie Greifield. We just want to mark this alert that just crossed our screens on our terminals here. So a Hong Kong appeals court has now upholded the jailing of 12 Democrats. That's really kind of the latest that we see so far, but it looks like the jailing of those 12 Democrats has been upheld here right now.
Yeah, we're getting, so I'm just looking at this, the line dropping through out of AFP. So you have the High Court Chief Judge, and this is a one-liner here, so just bear with me.
Yes.
So we dismiss the applicant's appeal against the conviction and, of course, the sentence. So that's effectively what you need to know at this point in time. Okay, I'm dropping my pencil now. Okay, let's have a look at how equity markets are doing. We'll take a short break, and we'll update you, of course, on other big stories taking place, one of which is, of course, this bounce we're seeing in equity markets with the Hang Seng Tech Index. There we go, up 4% in the first hour and 15 minutes of the week. Right, welcome back. A check at the most active contracts, Brent and West Texas, and the space between, as David Matthews once mulled many decades back, is the spread between the two. As you can see on price, we're both down. Progress perhaps set to resume Thursday when the two sides we're talking about, the U.S. and Iran, are set to meet, of course, in Geneva. Investors are weighing the odds, of course, of a potential nuclear deal, perhaps potentially is in the offing. We'll see. Let's bring in our oil trading reporter, Rong Wei Neo, out of Singapore for us. And yeah, I mean, we're looking at declines. Can we say that traders are removing some of the premium built over the last several weeks?
We have seen concrete actions being taken by the U.S. military, building up a physical presence in the Middle Eastern regions, and that has really stoked fears for traders ahead of potential supply risks. So a lot of traders that we have spoken to, they've undertaken more bullish bets. They've started to hedge against these price premiums. Several banks have also said that these prices now have included people already priced in these war risk premiums. So we're starting to see that these bets have started to come off just a bit because a lot of people have expected something to escalate over the weekends when it comes to the situation in the Middle East. Instead, what we've been hearing a bit more about is on Trump and his tariffs, which doesn't directly affect the oil markets.
All right. Wrong way, thank you. Wrong way, Neo, there, oil trading reporter. Yeah, it's interesting too. Goldman raising their year-end oil forecast. They're talking about $60 oil for Brent now in the fourth quarter. So still lower by current levels, but still expecting a little bit more in terms of their forecast. But then again, they're not expecting any sort of disturbance in terms of supply on the Iran situation. Let's check another world news here this morning as well. The U.S. Secret Service says an armed man was shot and killed after entering a secured area at President Trump's Mar-a-Lago estate. Agents say the man was carrying what looked like a shotgun and a fuel can. The suspect has not yet been identified. President Trump was in Washington at the time of the incident.
He was ordered to drop those two pieces of equipment that he had with him, at which time he put down the gas can, raised the shotgun to a shooting position. At that point in time, the deputy and the two Secret Service agents fired their weapons and neutralized the threat.
Mexican authorities have killed a top drug cartel leader in a military raid in the western state of Jalisco. Now, the government says the leader of new generation known as El Mencho was killed along with 6 cartel members. U.S. officials celebrated the killing, which comes with Mexico under increasing pressure from President Trump to halt the flow of illegal drugs into the U.S. And more than 35 million people across New York City and the U.S. Northeast are under blizzard warnings as a huge winter storm brings heavy snow and howling winds. New York Mayor Zohran Mamdani has closed streets, highways, and bridges to most traffic from 9 p.m. Sunday night through noon on Monday Eastern Time. Public schools are also closed as up to 24 inches of snow may fall, accompanied by high winds and coastal flooding. Yeah, we're going to leave you. It doesn't look pretty right now. I'm taking a look at pictures out of Philadelphia here this evening now. Oof. If you're in the area, stay safe. You're watching The China Show. All right. What's trending in China? Yes, it's her, Eileen Gu. She's won hearts in China after taking the gold medal in the women's ski halfpipe at the Winter Olympics in Italy. Now, Gu's win makes her the most decorated free skier of all time, with her 3 golds and most won by anyone in the sport, male or female. And it means she's won 6 medals in all 6 Olympic events she's contested over 2 games, 3 gold and 3 silver. Hashtags about her are dominating trending topics on Chinese social media today. Yeah, they call her the snow princess. And they're all falling in love with Eileen Gu.
Yeah, obviously the competency when it comes to the sport, plus, of course, this very vulnerable moment, which we'll get to in a moment there. We're really used to seeing her very, very confident. And, of course, that exchange with that reporter a few days back really just underscores that latter point. But just in terms of some of the reaction on social media, many users on Weibo also pointed out that Gu learned, this is the point we were making, that the heartbreaking news of her grandmother's death right after winning her gold medal. Now, others noted how she came back stronger after suffering, of course, that serious injury back in the summer, and really, I guess, underscores her just being able to come back and obviously compete. And I think just to tie this back together, I think what really caught people's hearts was her vulnerability, of course, when it comes to her learning about the passing of someone very, very close to her.
Yes, it was quite an emotional sort of interview that she had when she announced that. But yes, I think it's also become quite political, right? I mean, obviously there's this kind of very public controversy around her sporting allegiances and her being American and competing for China. And I think even the U.S. Vice President, J.D. Vance, has talked about, someone who has, benefited from the education system. Obviously, she goes to Stanford, that they should compete for the USA. Republican lawmakers have also chimed in on all this as well. But yeah, she's been asked before, right? Do you feel like you are becoming the punch bag of the U.S.? And she goes, yeah, sometimes I feel like I am really carrying the weight of 2 countries on my shoulders.
Yes. And amidst that, she
still wins.
Yeah, become the most decorated free skier, right?
Yeah.
Of all time.
I loved her interview. That response that she gave.
The back and forth?
About, when she won the 2 silvers. Are these 2 silvers gained or 2 golds lost? And she just laughed. And I think just...
Yeah, a medal's a medal.
She's the most decorated one.
Yeah.
And so certainly, yes, she is definitely the dream of all Asian parents out there.
Well, you know what? You and I we've never lost the gold medal as well. That's it from us. We'll see you all tomorrow.